there, good afternoon. You've tuned into ET now, and this is Closing Trades with me, Shel D'Souza. Along with me, I have Snehi Shah. It's not turned out to be a great day for the markets, given the fact in the last 3 hours or so, we've seen a sharp downtick coming in for the benchmark indices, and we've only drifted lower, 1% downtick coming in for the Nifty, in excess of about 300 points that we are off the day's highest point. That is a benchmark indices. At one point in time, we did actually slip below the 24,700 mark as well for the Nifty. Nifty Bank as well, that one is underperforming or rather in tandem with the benchmark indices. The fall, however, is much more sharper for the Nifty Bank from the day's highest point. 680 points downtick coming in for Nifty Bank. Let's take a look at what the broader markets are doing, given the fact that has been the brightest spot through the most of the trading sessions, given the fact that the outperformance of the broader markets compared to the benchmark indices. But today the picture is absolutely the opposite, where you have the mid-cap index that's seen declines of about 1.5% or so. There are a lot of global commentary also that could be weighing on the markets, given the fact that you have the Iranian Supreme Leader talking about the nuclear deal with the United States, and that kind of has also marred the sentiment when you talk about the markets. But a lot of stocks are in focus today, Snehi, apart from the fact that we are only taking a look at the benchmark indices. But yes, we are in midst of the earnings season. A lot of earnings candidates also moving in trade.
Absolutely. Cheryl, one of them is DLF, because given the way the market is consolidating right now, DLF is one of the stocks, one of the few stocks I should call it, that has managed to hold on to the green right now. Good move coming in from DLF, although we do assume that it's consolidated from its day's highest point, and it has. But still, you have pre-sales that have gone up 39% for Q4 on a year-on-year basis. That's been looking good. You have Morgan Stanley that's maintained its overweight rating with a target price of 910 rupees. Similar call coming from Nomura, wherein they've maintained neutral, but the target price is at 700 rupees. So it's quite the broad range that the street is indicating for DLF, but on the back of very solid set of numbers coming in. Pre-sales have gone up. PAT has also gone up quite significantly, so that's looking good for DLF. Moving on, let's also talk about BEL. That in fact should be called the stock of the day, given the number of times that stock has been in focus today on the back of different reasons, all related to earnings, of course, but they also had their con call that happened almost at midday today, and they have given some very bullish outlook when it comes to their con call and the guidance ahead. Target revenue is what they're aiming at, 15 to 17.5% over the next 4 to 5 years, looking at EBITDA margin of 27% in FY26 versus the guided range of 23 to 25% earlier. So that margin guidance uptick that has come in, that has given the thumbs up to this stock by the street, and they also plan a 1,000 crore capex annually in the coming years. But other than that, on an earnings fine print, net profit is up 18.5%. Their EBITDA margins have also gone up quite meaningfully on a year-on-year basis. Let's also talk about Zydus Life, because you have revenue that's come in at 18% higher, although net profit has taken a little bit of a cut. It's 1% lower on a year-on-year basis. Their margins have gone up quite a lot. EBITDA has also gone up almost 40% if you speak on a year-on-year basis. Good set coming in for Zydus Life. And also a few minutes ago, we had Hindalco's numbers coming out. That was a beat on all fronts except net profit. Revenue, EBITDA margin all beat compared to ours and the overall street estimates. So looking good on that front as well. But well, that's all the stocks that were in focus today. And Cheryl, all eyes are going to be on a couple more when numbers come out tomorrow, the likes of Colgate, for example, because that stock is expected to show some muted earnings, and it's also marred in today's trade.
Absolutely, that is Colgate for you, and in fact Colgate has been showing muted earnings for a while now, but nevertheless is the bellwether when you talk about that particular segment. That is Colgate for you, where we are also seeing that the poll has indicated muted earnings for Colgate going ahead. But what's the strategy for the markets? We have Deven Choksi joining us right now on the show. Very good afternoon to you, Deven. Thank you so much for being part of the show. I wanted to try and understand, how should one gauge this sort of a market, right? Because at one point in time, you had a significant downturn in the market. You were very sure that the markets are only going to drift lower. Then you saw a rally in the market, and you were sure that the rally will continue. Now markets are in a consolidatory phase. So what should you do? What should be the strategy? Wait, watch, and hold on to it?
Yep. Good afternoon. Well, as I understand, I think the market is now experiencing the sector and the stock rotations in a significant manner. Those stocks, I think, which are significantly appreciated, likes of Reliance included, I think they are probably finding some exit and getting into the names like metal in current times. So as we see it, I think the markets are basically wanting to get into the momentum once again. And that's where you are seeing the shift happening in rotational manner. we probably would like to believe that I think those sectors and the stocks therein which are neglected up till now, say for example metals I talked about, or for that matter even public sector banks, or for that matter even IT companies, probably I think you might see the preference going into them, I think when the sectoral rotation takes place. So this market is all about, I think, quick shifting and getting into the momentum based stocks at any given point of time.
Point taken, Devan. Hi, this is Snehi also joining in the conversation. Want to understand the kind of market moves that we've seen today in particular. We were expected to open at a very decent level above the 25,000 mark. Forget 25,000 right now, even sustaining above 24,700 is seeming like a big task for the market. Help us understand if this is purely profit booking, if this is global sentiment weighing on our market, or what are the factors at play, because there has not been any incrementally negative news coming in for our markets across the breadth to be reacting so sharply today.
Well, yes, I think no negative news for sure. I think, and we are basically looking at the market to cross the higher levels, maybe crossing 25,200 in a due course of time. But before it happens, I think some part of the rotation, some part of the profit booking, some part of the shifting from the large cap heavyweight stocks to some of the neglected up till now, those kind of sectors of the stocks, I think are gaining the preference at this point of time. And that's the reason for which I think we are seeing the slightly lower trajectory of the index right now, and profit being in the heavyweight stocks like Reliance, which I mentioned earlier.
Right, so that's the take coming in on the markets and the texture. I wanted to know, Devin, when you look at the markets and now everyone's spinning hopes on H2 of FY26, and the reason why I'm saying H2 of FY26 because hopefully things will start settling in when you talk about the earnings projections for most of these companies. Q1, Q2, we know that most of the part of Q4 FY25, you had this entire tariff announcement coming in. Some of the companies were impacted. Talk about Q1, no clarity yet. Maybe Q2 also, hopefully we may get some sort of a clarity. So which means, are you also on the camp that believes from H2 of FY26 is when things will start looking better, and therefore you should look at sectors that will actually augur well or benefit from whatever transpires going ahead?
Well, absolutely. I think some of the mainframe items, I think, which are likely to unfold in coming period, we are going to see the reconstruction-led demand in some of the commodities globally, including metals, particularly because of the situation on the war front is probably, I think, showing the symptoms of cooling down, be it Russia, Ukraine, or be it America talking about signing the nuclear treaty with Iran, or even that matter, I think India-Pakistan related situation, I think remain under control, which means that I think the wherever the damage have taken place in those territory, including I think the Gaza territory where America has shown the intention to take it over. Maybe I think the reconstruction-led demand could possibly be the new thing which one will have to experience or one will be experiencing in the financial year 26. In which part of the year it would be? I think most likely in the second half of the financial year for sure. If that happens, then probably I think we're likely to see firmer trend for the commodity as a whole. Given the kind of agreement coming up on the trade front and the tariff front, in my understanding, even the IT is not looking bad from the current perspective and the future perspective too. So that could also be once again be shown a greater amount of acceptance in the market in the portfolio. Maybe India economy, I think, is showing higher amount of growth, and that's where we are likely to see the demand continuing. Maybe growth in excess of 15% for some of the industries and the companies therein could be a reality. So again, I think you are going to see the preference in those stocks, I think, in coming quarter and second half of the year. So we remain distinctly optimistic about the prospects going forward for some of the companies in the FY26 and thereafter.
That view. You did speak about realty, and on that note, we have an 18-hour news break confirmed. A big boost for the real estate sector coming in Maharashtra. The state announces the new housing policy. Anurag Shah is joining us with all the details about this story that he has been tracking very, very carefully. Anurag, take it away.
big development related to housing and real estate sector in Maharashtra, and listed companies based out of Maharashtra as after 18 years, government of Maharashtra has announced new housing policy, and this new policy has been named as Majha Ghar Majha Adhikar, that is my home, my right. Under this new policy, 70,000 crores of investments are planned, and a major focus will be on affordable housing, slum rehabilitation, redevelopment projects. Incentives will be given for the public-private partnership projects, land bank rationalization under the new policy. Premium rationalization is also a part of focus, as in city of Mumbai, the major part of overall project is of a premium, also around 30 to 35% of cost goes into premium charges. So premium also been rationalized in a new housing policy, and there are incentives for rental housing project, there are incentives for student housing projects that has been mentioned by Chief Minister Devendra Fadnavis. So last housing policy was announced in year 2007, and after that lot of scenario has changed, and demand for housing and increased, and major demand is for the affordable housing for middle class, for LIG groups, for MIG groups. So considering all factors, new policy has been announced by Maharashtra government and got a cabinet approval today. So going ahead, government plan to give a single window clearance also for approvals related to the real estate projects also. So big development related to housing and real estate sector in Maharashtra.
महाराष्ट्र में आज हमने नई हाउसिंग पॉलिसी लाई है। इस नई हाउसिंग पॉलिसी में सभी प्रकार के लोगों को घर मिले, इसका प्रावधान किया है। इसका टाइटल ही मेरा घर मेरा अधिकार, इस प्रकार का इसका टाइटल हमने रखा है, जिसमें चाहे वो इंक्लूसिव हाउसिंग हो, चाहे स्टूडेंट्स हाउसिंग हो, चाहे कामकाजी महिलाओं का हाउसिंग हो, चाहे सीनियर सिटीजन्स का हाउसिंग हो, चाहे कामगारों का हाउसिंग हो, सब प्रकार के जितने घटक हैं इनका हमने विचार किया है। रेंटल हाउसिंग का भी विचार इसमें किया हुआ है। अलग अलग प्रकार से जो योजनाएं बंद पड़ी है उन योजनाओं का विचार भी इसमें किया है। रीडेवलपमेंट का भी विचार किया है। सेल्फ रीडेवलपमेंट का भी विचार इसमें किया हुआ है। लैंड बैंक्स तैयार करने का विचार किया हुआ है। अफोर्डेबल हाउसिंग का विचार किया हुआ है। सस्टेनेबिलिटी लाने का विचार भी इसमें किया है। नई कंस्ट्रक्शन टेक्नोलॉजी लाने का भी विचार इसमें किया हुआ है। ग्रामीण शहरी सभी प्रकार के हाउसिंग की नीड्स को ध्यान में रखते हुए इस धोरण को, इस पॉलिसी को तैयार किया गया है।
That's the word coming in from Maharashtra CM Devendra Fadnavis on the intricacies of this policy. But Deven, want to get your view on some of these real estate names, because while this is a big thrust coming into affordable housing, we've heard that a lot of companies recently have forayed out of that sector. Mahindra Life is one example, where in this quarter they've announced that they are not going to be operating in that sector at all. What is your take on affordable housing, and which companies do you think stand to benefit from here in terms of real estate players as well as affordable housing financiers? What's your take here?
Yes, I think it's pertinent to know this particular aspect. I think we categorize companies into three parts. Of course, affordable housing remains at the lower end of the pyramid. In between, I think the companies which are basically making the housing available for the variety of needs, and then there is a premium housing category, wherein I think some of the companies which with premium housing as a focus, they operate. So as we see today, I think the premium housing segment really remains in a good demand, because out there, I think there is a significantly large amount of consumption intact as is happening around. So that category of companies are remaining separate. There's one, I think, the middle layer, where probably I think the large amount of mass housing related activity happening, other than the affordable housing, is something which I think one will have to be looking at very systematically, given the kind of initiative that the government of Maharashtra is taking. All in all, together, I think these companies are likely to see next 5 to 10 years of significantly large amount of growth going forward. But the one which will give the steady rate of growth and the return would be the housing finance companies, And we believe that some of the housing finance companies would really have better times given the trajectory of lower interest cost and given the demand uptake that which is increasing. So maybe I think the likes of Bajaj Housing, which operates with a very different model on the revenue stream side, I think we believe that these kind of companies would have really better opportunities going forward.
All right, so that's the take coming in on some of the counters you need to watch out for, given the fact that what even Maharashtra cabinet has done and the move coming in order for the housing sector. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, we'll chart the market for you in the last half hour of trading session. Don't go anywhere.
Hi there, welcome back to Closing Trades. About 30 odd minutes left for our trading session today. Just taking stock of where the market is right now. Seems like we are in for some more consolidation on the market right now because we have slipped even below the 24,700 mark. A 1% cut on the Nifty, on the Sensex, Nifty Bank too lower by 1%. The broader end of the market also not looking very promising right now because if I pull up the Nifty mid-cap, it's a 1.5% cut coming in. So the sell-off seems to have intensified on that front and almost 0.8% cut coming in on the Nifty small cap as well. In fact, Nifty 50 also lower by more than 1% from the day's highest point. It's a 2% fall coming in on the Nifty mid-cap from the day's highest point. Similar can be said about the Nifty small cap index as well. So while no strength of support from the broader end or from the benchmarks today. But we also have Akshay Bhagwat, Senior Vice President, Derivatives Research, JM Financial Services, joining us. Along with him, we also have Vinay Rajani, CMT, Senior Technical and Derivative Analyst of HDFC Securities, joining us. And Devin is back with us on the show. Good afternoon to all you gentlemen. Akshay, let's come to you first. Give us a sense of the trading setup that we've seen in today's session. Do you believe that this sell-off that we've seen today, a little bit of a profit booking coming into play, is setting a good support at least for tomorrow, and tomorrow's trade could look a little bit of a reverse in a reverse momentum from where we've seen today? Are we spotting some green on the charts now, or do you believe that this sell-off that we're seeing is here to stay for at least a couple more trading sessions?
So first of all, good afternoon. Well, if you look at the broader market, it's been a one-way rally. And after such a one-way move, there is a good chance that markets may slip into a sideways consolidation or a time correction mode. And that is exactly probably where the markets are unfolding now. The prices are mostly hinting that we are getting into a range bound scenario. Now, if you were to define the broader end of this range, probably as it seems right now, 24,400 might be the lower end of the range, and 25,200 can be the upper end of the range. So yes, if you were to pinpoint exactly, there might be some support coming in the market for tomorrow's session. That level most probably looks around the levels of 24,450 to 500 zone, where a lot of put writing in the option space also are concentrated. So in all probability, that is the support where markets should kind of steady back again. For the next couple of days, expect a slight weakness in the broader market breadth, considering that the sell-off the trigger for the sell-off has started today.
Right. So that's the take coming in on overall benchmark indices. Vinay, what's your view on the broader markets? Because everyone was touting the fact that the recovery would be sharper in that particular area. Today they've caved in. Do you think it's just a bout of profit booking that we are actually witnessing when you talk about the broader markets, and more sort of strength is in store after this sort of a pause?
Yeah, good afternoon. So yes, definitely it is a concern. Today, mid-cap index has fallen by 1.6%, and the way it is shaping up, yesterday we saw a doji candlestick pattern on the daily chart, and today the profit booking is there. So it confirms the short-term reversal. So positionally it is not bearish, but short-term, yes, we can expect some more correction in the mid-cap and small caps going by the technical setup. So yes, couple of session could be there. Further extension of the profit booking could be there, though the positional trend will remain strong, but at least we can expect a couple of percentage further extension of the fall in the mid cap and small caps. Nifty is not looking that much weak as compared to mid cap and small cap. So yes, broader markets are a bit concern, and one should wait for proper level. I think couple of percentage fall should be there, and after that one can think of considering the long position in the broader market. But as of now, the way it is closing, it is definitely a weak sign, and we can expect some more correction in the next couple of sessions.
So more correction overall, but broader market looking slightly more cautious than the benchmarks. That's the word coming in from Vinay. But Devin, we'll come to you, and while we're talking about benchmarks, I want to talk about Hindalco and its earnings that we've seen compared to what the street was estimating. Except profit, it's a beat coming in on revenue, EBITDA margins, but the stock is not showing any positive momentum at all. But given it's still 0.2% higher amid a market like this, it's still holding on to the green, but not much happening, and it's not been able to lift the Nifty also from the day's highest point. What are you making of these numbers, given that Novelis was largely in line, and these numbers also seem to be very, very good at the first cut?
Yes, indeed. I think the quarterly numbers, nothing against. Maybe I think the market was anticipating it. Probably, I think after the Novelis result, I think this anticipation was, I think, quite high. Uh, Maybe I think in the current financial year, a couple of things could possibly work in favor of, in general, for most of the metal commodity companies. On one side, I think the cost of input, including the energy costs, would probably remain slightly lower. So that is a good sign for profit margin. On the other side, the demand scenario along with the price outlook is improving. And as a result of it, both ferrous and non-ferrous metals are likely to show relatively better amount of pricing trend. Given the kind of situation in which I think most of our companies are operating today, on one side, they have the opportunity to make better profits given the kind of lower input intake costs, including of energy and including of, I think, the mines where probably I think some of these companies are operating and including coal at the same time. And on the other side, I think the situation on the demand front is definitely improving. So certainly, we believe that the formal price trajectory, along with the higher volume growth, could possibly be a good formula for many of the metal commodity companies to perform better. Not completely sure immediately at this point of time to talk about Hindalco, but on the face of it, the numbers are looking relatively okay and should be progressing further in the subsequent quarters as I see it.
Right, so that's the take coming in on Hindalco. Devin, I wanted to get your view when you talk about this entire space, when you talk about infrastructure, right? Today you have this commentary coming in from GQG's Rajiv Jain, who's saying that they are very, very underweight on China. They are looking and they have been buyers in the Indian markets. Apart from that, they said that they like the infra investment theme in India. When you talk about infra theme, that theme is very large because we don't also take into consideration that there are other segments when you talk about infra development, like you have water as well as telecom. That also comes under the infra development when you talk about India, isn't it? Correct me if I'm wrong though. So what's your take when you talk about infra? Is this the holistic approach that you must take?
Well, yes, I think a complete approach I think has to be cultivated, be it in the power and power ancillary related businesses, or be it in the area of the infrastructure per se, in the logistic related businesses, wherein I think you include the road, railways, waterways, and airways. And at the same time, I think the newer segments like renewable segment of energy, and at the same time data center. So all in all put together, yes, I think we do believe that it should be an inclusive play going forward. India has been spending large amount of money. I think this year the budget for spending on infrastructure is about 11 lakh crore plus. And as we see it, I think given the kind of strength of revenue generation in the country, we believe that I think we should be progressively increasing spending budget by about 10% every successive year till 2030. So given that kind of a situation, we believe that some of the infra companies could relatively have better times. Companies which have already completed their projects and generating free cash flows are in a better position to create organic as well as inorganic growth. And that's where I think one will have to keep an eye within this entire basket. We believe that I think this is an opportunity for some case wherein those long-term investors who are basically putting the larger amount of money, I think, from the insurance companies or from sovereign funds, etc. I think they could be really looking at some of the large infrastructure companies which are operating in the country today.
Okay, Devin, appreciate that view on the infra space. Thanks so much for joining us. On that note, we'll let you go. But time now to get our closing trades from our technical experts who have joined us on the show. Akshay, we'll come to you first. What's looking good for tomorrow and what's your closing trade for the day?
Well, see, today the markets are in the red, but I believe there are some broader setups in stocks which do give you a promising opportunity at the lower end on dips as it presents today. So, stocks to keep on your radar on the buy watch list would be Larsen and Toubro. You can buy it at the current market price. Overall, the broader technical setup is very positive, a very strong reaction on the upside we have seen in the last few days. So, I'm overall looking at targets of 3750 to 3778. We'll maintain 3497 as a stop loss on this trade. Second recommendation is in DLF, whose results, the reaction post results has been tremendous, especially in the opening hour of trade. But with the market breadth weakening during the day, there has been some profit booking noted in DLF. But eventually, I believe there will be buyers who will be lined up at dips, which should pull the stock up again to the levels of 795. So that is the target area one should be working with on the buy trade in DLF. And 722 will be the stop loss on this buying recommendation.
Okay, so that's Akshay's closing trades. What about you, Vinay? What's looking good for tomorrow, and how would you position your trades for tomorrow?
Yeah, so going by the chart, I feel that one can go short in some of the derivative stocks which are looking weak on the chart. So one of the stock which I feel should go down is the REC. So REC is looking weak and it has recently taken a resistance at its 50 days exponential moving average and started coming down. So relatively underperformance is there and it is trading below its 50 and 200 days average. So considering the primary trend, I feel that in this kind of scenario, one can go short in the REC. So this can be captured through futures. So REC May future can be shorted at 396, 397. Stop loss I would suggest at 403. On the downside, I'm expecting a target of 388. The second pick also I would like to go short because we are taking a bet on tomorrow's call. So Torrent Power is looking weak. So for last 6-7 trading sessions, the Torrent Power has been finding resistance at its 200 days EMA. And relatively, this chart setup is weak because in the rising market also this stock did not perform. And in such a scenario where underperformer stock is there, we should take this opportunity to go short here. So Torrent Power May future can be shorted around 1400, 1395 to 1400 should be the selling range in the May future. I am suggesting a stop loss at 1430. And on the downside, we can expect a target of 1360. So Torrent Power and REC May future one can go short with the mentioned stop losses.
Right, so those are some of the ideas coming in from our experts, but let's talk about an exclusive story that we have for you. And we understand from our sources that the National Securities Depository Limited, or NSDL as we all know it, has reduced its IPO size according to the addendum to its draft papers. Banks such as IDBI Bank, HDFC Bank, SBI and Union Bank are all set to pare the stake. Let's go across to Ankur, who has more details on that. Ankur, what are you picking up with regards to NSDL's IPO and what's the latest?
Yes, NSDL IPO is expected soon as per sources because the company has now filed addendum to DRHP. The size which was earlier 3,500 crore for the IPO is now pegged at around rupees 3,000 crore, and also the addendum includes updated financials and revised disclosures in the IPO. If you talk about the cut in size, it has primarily come from Union Bank, which is now going to offload only 5 million shares. Earlier this size was 5 million shares and now it has been cut to 0.5 million shares. So there the reduction is coming from. Apart from that, if you talk about the overall size, that has been cut around 12%, that is what the estimate is. NSDL is going to trim the offer size, if you talk in terms of shares, to 50 million shares versus 57 million planned earlier. Now, who is going to offload the stake? NSE is going to offload 18 million shares or 9% stake in NSDL IPO. Similarly, I already told about Union Bank, but HDFC Bank, SBI, Suti is also going to pair the stake in IPO. Remember earlier, the company had got approval from SEBI regarding the extension of IPO timeline after there were few questions, so there was a delay, and now we understand that IPO is going to hit the market very soon.
Okay, Ankur, thanks for all of those exclusive details coming in on the upcoming NSDL IPO, and sources say that's going to be hitting these streets soon. But on that note, we'll slip into a very short break on this edition of Closing Trades. On the other side, we'll keep chatting with our technical experts, and Sudeep Bandyopadhyay will also be joining us.
Welcome back. You're watching Closing Trades right here on ET now, and looks like we are going to close towards the lowest point of the day when you talk about the broader markets at least, and also the benchmark indices. 1% downtick coming in for Nifty. We are below that 24,700 mark. Till the last 2 days, we were only talking about 25,000 when you talk of the benchmark indices. Broader markets, that they were the ones that were holding out in trade today. They've also caved in today's trading session. We have Sandeep Bandyopadhyay joining us on the show. Very good afternoon to you, Sandeep. Thank you so much for joining us on ET now. And I believe now all eyes and all attention is shifted towards what will be the likelihood of the trade deal between India and the United States. We know that Piyush Goyal is in the United States for a 4-day meeting and trying to carve out some the trade deal with the United States. There are a lot of news or reports floating around what sort of a deal they could actually cut with the United States. But what's your take? Now, what are the markets waiting for? You think it's just a point of consolidation because too much has happened or too much has transpired in the last 1 month?
Oh, absolutely right. I think, more than the trade deal, of course, there are uncertainties and speculation around what the trade deal can or can't do with bit of consolidation, profit booking, or bit of a risk aversion, whatever terminology we may choose. I think it's pretty much on the back of that. Things have moved up quite a bit in the recent past, over the last 1 week. And a bit of profit booking, bit of caution was warranted. And that's what pretty much we are getting kind of displayed today. Some amount of concern is building definitely around the trade deal. And, the 2nd June, by when that 90-day period runs out, is also around the corner. So there is a race against time to get the deals done. And many countries are, at it. So we'll have to wait and watch because, US policy making currently is inherently very volatile, and we'll have to be bracing for some amount of turbulence going ahead again. So it's better to be a bit cautious, better to be a bit guarded as we approach 2nd June.
That's the take on what our trade deal could potentially hold for us, and all eyes are going to be focused on that only. But Sudeep, also want to get your sense on the top Nifty loser today, and that's Eternal. It has been consolidating over the course of the day, but now it's lower by 4%. Yesterday also the stock was cracking in trade, but today we have news flow that the board has received shareholder approval to cap the foreign holding at 49.5%. Remember almost a month ago when this announcement first came into the market, when the shareholder approval was pending, this was seen in a very positive light, and today when this approval has come in, there has been a sharp cut on the stock of 4%. This also means that there could be a potential loss of flows coming in from global indices, for example, the MSCI index. Help us understand why this divergence in terms of the stock move that we've seen for Eternal, and what lies ahead fundamentally for the company.
I think fundamentally, if you look at it, they're making a conscious call regarding how they want to run their business. If they are going to be based, they're keeping the foreign holding below 50%, they will be entitled to do many things which a foreign entity, which is by definition companies having more than 50% foreign shareholding, will not be allowed to do. So they have chosen that, and they want to operate those dark stores. They want to have inventory with themselves, which they want to sell directly. So these are the things which will probably give them benefit in the long run, and their business structure fundamentally will be different from a Zepto or even a Swiggy. And that's the distinction they're trying to draw. Yes, it will definitely ensure that the flows don't come the way they will come into a Swiggy or a Zepto when it gets listed. But I think that's a conscious call, and it's a conscious call based on the model they're choosing to go ahead with. So I won't read too much into it. There are business models which are very solid and sound based in the parameters of a domestic company. Again, there are advantages of having foreign inflows into the company. So we'll have to see how things pan out, how they're able to scale up their business. But as things stand today in front of Eternal, I think their quick commerce business is in the phase of scale up with intense competition, and that is eating into the margins. Under the circumstances, they have very clearly said that the margins will be under pressure, and market is cognizant of that. So I won't read too much into today's this correction, which is on the back of this fear that foreign inflows will come much lower in Eternal going forward. Yes, that's a fact, but I don't think that will prevent Eternal from performing either in the P&L sense or in the market sense.
All right, so that's the take coming in on Eternal and also the rest of the quick commerce players. But let's move on and let's talk about national news, given the fact that there are 7 all-party delegations that will soon visit key nations later this month, reflecting India's collective resolve against terrorism. The government has shared the full list of members and details of the nations that they will be visiting. Sumita is here with all the details. And Sumita outlined to us the 7 actually groups that have been formed and which are the nations they're going to target this time around.
Absolutely, Cheryl. Now, this is a crucial diplomatic outreach that has been made by the government of India. These 7 delegations that will, with several opposition MPs, with diplomats as well, will be visiting global capitals to ensure that there is one syndicated message that is going out, one collective message that's going out from India, and that is its no-nonsense, no-tolerance approach to terrorism, especially the one that's emanating from Pakistani soil. So these opposition MPs will be briefed by the Foreign Secretary. Remember, there was a briefing yesterday as well, wherein the Parliamentary Committee on External Affairs was briefed with respect to India's approach to Operation Sindoor, how precise these strikes were, and perhaps the same briefing will also be given to opposition MPs and, like I said, other members as well, as part of these 7 delegations, 7 groupings essentially, which will travel to different parts of the world to send out one message from India, that is, India is a victim, Pakistan an aggressor, and hence both of them cannot be equated. The other thing to know here is that we have accessed, in fact, the travel schedule. So all of these 7 delegations that are traveling, they're essentially traveling from the 21st of May, and the last one then travels till the very 5th of June. In fact, we're given to understand that the delegation led by Sanjay Jha and Shrikant Shinde will be the first ones. So essentially, the trip to Japan and UAE is going to be the first one. So we have a delegation leaving on 21st May till the 31st of May. It will go to UAE, Congo, Sierra Leone, Liberia. Then you have the second one leaving on 22nd May till the 31st of June. It's going to Japan, Korea, Singapore, Indonesia, Malaysia. Like that, there are several other countries in the Gulf as well. There is Saudi Arabia, Bahrain, Kuwait, Algeria. They will be, these delegations will go there, and then South America as well. Then, of course, Brazil, USA, Guyana, Panama. There is Russia, Slovenia as well, Qatar, South Africa, Ethiopia, Egypt. So, of course, these delegations will go to UNSC permanent and non-permanent member countries to clear out their stance. It is also India's effort to make sure that there is transparency so far as communication on what really happened during the Pahalgam terror attack and in the aftermath of that, when Operation Sindoor was conducted. That is clarified. This is a diplomatic procedure that India is following so that there is no disinformation or misinformation. Remember, that's been one of the challenges that India has faced, given that the Pakistani side has, unleashed a bevy of information and disinformation, misinformation and disinformation campaigns related to Operation Sindoor.
Thanks for bringing us all of those details. We'll be keeping you updated on that front as and when we have more developments from each of these 7 delegations. But let's throw some light on Nifty earnings tomorrow. 2 Nifty companies coming out with their quarter for FY25 numbers. That's ONGC as well as Indent Bank. Let's understand what the street is penciling in when it comes to ONGC's quarter 4 numbers and what we can expect. What are going to be some important factors to watch out for when the numbers do come out, because we are expecting it to be flat on a sequential basis, but profit is expected to increase. Let's take it across to Varun, who's here to help us understand what we can expect from ONGC's quarter 4 fine print.
Definitely. So if you look at the overall results, there could be some operational miss, but yes, other income and tax benefits, that is something that would overall aid the profitability of ONGC. We are estimating the revenues to be flat around 33,700 crores. The EBITDA would decline by around 4.25%, and the EBITDA margins could actually decline from 56.25% to 53.9%. But yes, the profit is going to increase by around 7% to 8,810 crores. Now the production, that would decline by around for crude, it would decline by around 2% on a quarter-on-quarter basis, and for the gas, it would decline by around 5% on a quarter-on-quarter basis. Also, the sales volume, they are expected to be flat this quarter. If you look at the benchmark crude prices, they are down by around 8% on a quarter-on-quarter and YOY basis, and also the Singapore GRMs, they have fallen by around 58% on a YOY basis. So this actually signals that the overall realizations could be a little bit flat. The overall GRM for ONGC, they could actually come down on a quarter-on-quarter basis. We will see how the ramp up the company does for the gas production and the oil production. That would be the key thing that you need to keep an eye on. But overall results, there would be an operational miss. Other income and tax benefits will actually aid the overall profit for this company.
So much for that, Varun, for letting us know what should we expect from ONGC when they report their Q4 numbers. But let's talk about the entire oil and gas space, Akshay, be it the downstream or the upstream companies. Which side of the fence will you lie when you talk about oil and gas space? And also, is that a sort of a sector that one should watch out for in order to park their money right now?
Well, honestly, from a short-term perspective, really, there are no triggers which I see on the charts which show a possible blowout move in the oil and gas space. If you look at the last few days of trading action, most of the oil and gas space has seen a good recovery or a bounce back, and they are in a phase where there is a short-term time correction on, where most of them probably will languish in a range-bound scenario. So really, if you're keen on the oil and gas space and looking for short-term trading recoveries or pullbacks, I believe the price structure of BPCL and HPCL would be the best among them. So HPCL probably, if you get it around 305, would be the right entry price on the dip to buy the stock. Similarly, for Hind Petro, if you were to wait for a slight dip around 390, that would bode well from a trading perspective. So yes, bullish on this space, but a time consolidation on. So wait for dips at the levels I mentioned for taking a fresh re-entry in these names.
Coming in on the OMCs and the oil and gas space. Thank you so much for that, Akshay, for getting us those views. Sudeep, let me come to you. And before I come to you, let's actually take a look at what we're expecting from Indent Bank when they actually report their numbers. This one has been marred, and the entire Q4 has not been great for Indent Bank because of all the negative news flow surrounding it. And that's what the poll is also indicating, that we're expecting a weak Q4 numbers coming in for Indent Bank, where we are expecting there to be a loss in the quarter, that is a loss of about 284 crore rupees as against a profit of about 1,402 crore rupees in the quarter ago. If you look at the provisions, we are expecting it to sharply rise 84%. We are expecting the NII as well as the operating profit to see a decline as well for Indent Bank. And the troubles don't seem to stop actually for Indent Bank, Sudeep. How should one actually gauge this one, irrespective of the earnings or not the earnings? If Indent Bank has to make the cut, do you think it will be able to revive itself and get the credibility back?
And the question is whether they will be able to revive themselves. I'm pretty confident they will be able to. Yes, this quarter was really a watershed or an unfortunate quarter for them. The forex loss of close to 2,000 crore. Then they had the microfinance hit of around 600 crores, and there are rumors of some more challenges which is brewing, and it's being analyzed at this stage. So yes, and on account of that, they will probably make large provisions in this quarter itself. So we will probably see everything getting cleaned up in this quarter. And post that, I think we will probably be in a position to look at the bank afresh and analyze it based on its fundamentals, based on its potential, and based on its capital adequacy numbers. The way I look at it, I think it's a strong bank. The promoter has already expressed its intention to recapitalize it if necessary. And the opportunity is huge in front of them. The management is changing. RBI is monitoring its activities very, very closely. It has got a large customer base. It's got a very large technology setup as well. So I'm reasonably confident, and considering that it is trading at a valuation which is significantly lower than what peers are trading at, it may be an opportunity for an aggressive investor to get into Indent Bank at this stage.
Okay, Sudeep, thanks for that view coming in on Indent Bank. So, weak set of numbers is what we're expecting, wherein we're expecting this company to have logged, this bank rather, to have logged in a loss on the net profit front for Q4 on the sequential as well as a year-on-year basis. But on that note, we'll let you go. Thanks everybody for joining us on the show. With that, we have 3 minutes left of today's trade. Let's start winding down for the day and take a look at what today's trading session has been for us. Let's understand what today's moves have been, and Nifty has been quite weak, almost a percent cut coming in on Nifty. 24,700 looking like it's a difficult print to hold on to right now. 3 minutes left. Let's see if we're able to sustain above the 24,700 mark. Similarly for Sensex as well, almost a percent cut coming in. We're now below that 81,300 mark on the Sensex as well. Weakish moves coming in, almost an 800-point cut coming in on an intraday basis on the Sensex spot. Nifty Bank as well in tandem with the benchmarks, a 0.9% cut coming in, significantly below that 55,000 mark that we were hoping to hold on to today, but that's not been possible, and a 500-point cut coming in on Nifty Bank today. Advanced decline ratio very steeply now in the favor of the declines today. That was not the story at opening bell, when you had almost 1400 stocks in the advances, but now that's completely changed and taken a turn, and 1900 stocks in the declines as we speak, with 800 in the green. On the back of that, India VIX has continued to change its shade today. A red and green mix is what we've seen. As of now, it has cooled off once again from those 17.5 levels. 17.2 thereabouts is where we are on the India VIX, and cooling off is what we've seen on this front. But what's key to talk about is the broader market today, because no show of strength coming in on that front. In fact, a further cut coming in on the Nifty mid-cap space, a 1.5% downfall on that front. Nifty small cap 2, almost 0.8% lower, and 17,500 is the print on Nifty small cap. Let's talk about some sectoral gainers and losers. It's all the sectors have ended in the red today, but it's been a major loss coming in for Nifty auto names. 2% cut coming in across the board for likes of Hero Motor, Bajaj Auto, Maruti, TVS Motor, Eicher and M&M. All of them have tanked around 2% in today's trade. Followed by that, you have Nifty Media, Nifty Pharma, FMCG, Bank, PSU banks have not done all that well either in today's trade. 0.8% lower, led by IOB, Central Bank, Maharashtra Bank, UCO Bank and Bank of Baroda. Nifty Realty, we heard news flow on the Maharashtra housing policy, still no revival on that front, although the DLF continues to shine on the back of very strong Q4 numbers. Nifty Energy 2 in the red, followed by Nifty Metal and Nifty IT, which is the least losing sector, Nifty IT, but nonetheless, names like Tech Mahindra, Wipro, HCL Tech and TCS have ended with cuts of anywhere between 0.5% and 1%. If we talk about some other stocks that were in focus today, Hindalco, obviously on the back of its earnings, stellar set coming in from Hindalco, net profit slight miss coming in, but revenue, EBITDA and EBITDA margins were above the street estimate. You have Arvind Fashions on the basis of its numbers. Antique came out with a note on the buy rating maintained, but target price hiked to 672. That stock has also held up pretty smartly, a 1% uptick coming in. BEL, strong set of numbers coming in, and even more positive was the con call highlight, wherein they've expanded the EBITDA margin and hiked it to 27% for FY26 compared to 23 to 25% earlier. That stock has also managed to hold on to the green, albeit it is nominally. Nazara Tech, they've acquired UK-based PC and console gaming publisher Curve Games for 247 crore rupees, and Nazara Tech was also a stock that was in focus in today's trade, a 1.8% uptick coming there. But with that, we're timed out on this edition of Closing Trades. It's a cut coming in across the board. We've ended in the red when it comes to the Nifty, but that's how we're wrapping up for the day. Thanks so much for tuning in.